Welcome everybody to the October session of the Australian Non-Profit Accounting Standards Research Programs Seminar Series. We're really lucky today to have Freddie Housa from the AISB with us to talk about not-for-profit accounting issues. But at the end of the day, I wanted to first and foremost acknowledge the First Nations people who have husbanded the land around our country, and from where different people are sitting in Western Australia, in Perth. I'd like to acknowledge the Whadjuk people of the Noongar Nation. I'd also like to let everyone know that on the 26th of November, we will have our last webinar session in this series. And we are lucky enough to have Angus Thompson also from the Australian Accounting Standards Board presenting, which will be fantastic. Freddie is speaking to us today on not-for-profit private sector financial reporting framework, which of course is a really important fundamental element that we all need to be across, and also need to be appreciative of what changes might happen, but perhaps more importantly, how they might affect our organisations and what kinds of opinions we might have in relation to that. Freddie will speak for about 40 minutes, and then we'll have question time after that. But he has indicated that he'd be delighted to take questions as we go through the. If you have any questions, please either raise a hand or please feel free to place that in the chat room. And at the end of the session, I'll try and bring all of those questions together to make sure that we get the best responses or outcomes from all of those questions that might be fielded. Freddie is the head of not-for-profit industry at AISB, and I'll hand over now for you to go for it. Cheers.
Thanks, David, and good afternoon, everyone, and thank you for this opportunity to give you an update on where we are at with the not-for-profit private sector financial reporting framework. Hopefully you can all hear me okay. If not, do let me know, and hopefully the technology will be on our side today. Before I will go anywhere further, just a usual disclaimer: any views that will be or may be presented today are views of my own and not necessarily representing views of the board or other staff. And obviously any errors I will make are my own. With that, I will move on to the agenda for today's session. I just thought that I will provide an overview of how WSB approaches a standard setting process, and I will try to relate it to the not-for-profit financial reporting framework before we'll talk about specific aspects of the not-for-profit financial reporting framework project, essentially why we are looking at this matter and issue, and what are the issues, and how we are trying to address it, and how we go along about it, and where we are in the process, as well as what are the next steps and timing. And as David mentioned, I'm happy to take any questions or comments along the way, but we should also have time to discuss after the presentation. So if that sounds like a good plan, I will move on to the next slide. This slide provides overview of WSB Strategic Objectives, which are essentially helps to achieve the purpose of WSB under the ESIC Act and Financial Reporting Council directives. And as you can see on the slide, there's a number of them, and they encompass developing and maintaining the standards, principle-based standards that are meeting the needs of the users and are capable of being issued. WSB aims to play leading role in shaping Australian external financial reporting frameworks and actively influence international accounting and financial reporting standard development, whether it's ISB or IPSASB and other standard setters. We are achieving that through the engagement with our key stakeholders on ongoing basis, and as well as we would like to influence reporting that is integral to financial reporting. WSB also seeks to monitor and respond to the emerging issues, and obviously one of the roles of WSB is to promote education and provide guidance. And all of that we would like to achieve with a high-performing team and within the Australian government guidelines, including the budget. So when board was thinking about this project, not-for-profit financial reporting framework to put on its work plan, obviously these objectives have been considered, and the project is contributing to achieving all of these objectives. And that refresh plan was approved in November 2019 for this particular project. Moving on to how does the WSB standard setting process look like? So this is one of the graphic representations how it looks like. This representation tries to also highlight one of the key elements of our approach, which is collection of the evidence and also feedback with the stakeholders. And you can see that actually it's not a one point in time procedure, but it's actually ongoing iterative process that starts with the identification of the issue and doesn't actually end with the standards being complete and issued, but continues with the education and awareness and post-implementation review. And in some cases that as a result of the post-implementation review, that standard setting process may start again. This standard setting process is actually embedded in our due process framework and for-profit and not-for-profit standard setting frameworks, which are policies that we follow when applying this process. And also what I wanted to highlight on this slide is indicate where we are at the moment with the not-for-profit financial reporting framework, which is the red circle in the middle, where currently board and the staff is considering the issues, researching and trying to find a potential solution to the issues identified in order to issue a public consultation document. And we will talk about that a bit later. While I'm on PIRs, or post-implementation review, which is at the bottom of the screen, it's probably an opportunity for me to plug in upcoming PIRs, domestic PIRs, post-implementation review of number of the standards that are providing Australian guidance for not-for-profit, private, and also public entities that will be starting in Q1 2022. So that's something that you may want to look up in our work plan and the board papers if you wish so, and happy to provide for the information either at this session or offline. And we'll be looking at matters like revenue and income accounting for not-for-profit entities, so WSB 1058 and NFP guidance to WSB 15, and for example consolidation WSB 10 and 12, etc. So that's something to be aware of going forward. Moving further, this slide tries to depict how we are applying that evidence-based approach and engagement strategy, specifically while continuing with the not-for-profit financial reporting framework project. We do review research and evidence coming from the research and academic literature, whether it's internally developed research by WSB staff or external by yourselves, academics, and others. We are reviewing that evidence on ongoing basis. So if you look at our board papers when we are considering a topic, one of the first elements of the considerations is actually evidence from the research available. In addition, for example, from the feedback from the stakeholders, which is the other element on the screen in blue, where we are seeking feedback from the stakeholders in a number of ways. One can see them as a targeted approach, trying to seek out preliminary feedback from particular stakeholders groups that we have maybe better access to. And however, very important and essential and mandatory part of any developed standard setting process and proposal development is actually public consultation. And that public consultation can a form of discussion paper or, for example, exposure draft. Also, very important part of the process are the consultative or advisory bodies, advisory panels, as we call them, to WSB. And in this case, we have formed not-for-profit project advisory panel, but also we have been seeking engagement through the academic advisory panel, especially on the research available for particular aspects of the not-for-profit financial reporting framework. So with that, this is the very high-level overview of some aspects of the WSB Standard Setting Framework project. And now let's have a look specifically at the not-for-profit financial reporting framework. So why we are looking at not-for-profit financial reporting framework, and why is that project on WSB work program? Well, after considering the feedback from ITC 39, which was looking at the reporting entity concept and existence of special purpose financial statements, WSB board determined that the response to not-for-profit private sector to develop simpler, proportionate, transparent, and consistent financial reporting framework may be different to the one to the response to the for-profit sector, and after the 2020 WSB 2020-2, which removed ability for some for-profit entities to prepare special purpose financial statements, and after implementation of WSB 1060, which introduced simplified disclosure requirements, replacing reduced disclosure requirements, it was time to turn WSB attention further onto the not-for-profit private sector. There is I would call it sister project, which is looking at what can be done about not-for-profit public sector financial reporting framework. So what we are considering there is obviously the feedback we have been hearing about the needs of the users in this sector compared to the relative to the cost of the preparers, and obviously skills available and knowledge available in this sector, and cost constraints. As well as recognizing that the ability to self-assess whether the entity is a reporting entity or not may result in two very similar entities preparing quite different financial reports that may be publicly used and may be in public domain to use. Another research report did actually noted that a significant portion of in that case, it was medium and large ACNC regulated charities did not disclose compliance with the recognition measurement in their special purpose financial statements, and other significant portion actually didn't comply with the recognition measurement of requirements of accounting standards, which again doesn't necessarily contribute to comparability and transparency of those financial reports. Another important consideration in this project is obviously varying financial reporting requirements in Australia across states and territories, and possibly different type of the entities. And other aspects I would probably mention as a part of the landscape is appreciation, but also diverse views on non-financial reporting. And I think everyone agrees how important is for not-for-profit private sector entities to tell the story, which is not just limited to financial reporting, quite on contrary, but also the diverse views, how to go about it and whether it should be standardized and in what shape or form. So all of this formed or informed board decision how to progress post ITC 39. And as a result, moving on to the next slide, WSB has performed several targeted consultations and outreach, as well as completed a number of the research reports that I have listed on the slides. And as a result, in November 2020, the board, based on that feedback, made a decision to progress to develop discussion paper. So not an exposure draft, but discussion paper, acknowledging that while it may have established preferred views on a number of the topics, it wants to engage with the sector in very robust way and further inform its views before it will proceed to possibly another stage of the standard setting project, which is the exposure draft. So where we are at is that staff and board are developing a discussion paper and considering various aspects of the not-for-profit financial reporting framework and how it can look like in the future, with the aim to publish those those proposals in the form of the discussion papers or preferred views in the form of discussion paper in Q3 next calendar year. And following, which probably will be 6 months consultation period, at least that's my thinking at this stage, our staff thinking at this stage, then to consider that feedback in half one 2023 before deciding whether and how to progress to the next stage, which may be the exposure draft. Happy to take any questions and comments along the way. Otherwise, I will move on to the next slide. And this slide depicts higher level, maybe main building blocks of those initial considerations, how that future financial reporting framework for not-for-profit private sector may look like. Starting from the left and maybe top, obviously the consideration is to be given whether to maintain status quo of the existing tier 1 and tier 2 reporting tiers that are available to not-for-profit entities in absence of the explicitly defined public accountability. And then the question is whether to develop additional tier or possibly tiers, especially if the ability to prepare special purpose financial statements would be removed from the not-for-profit private sector entities, similar to what's been done in the for-profit sector. With that, the consideration what is the interaction between the tiers comes to mind, and whether, for example, entities that would be required to prepare, for example, tier 3 financial statements would be able to opt up, and if so, whether in full or by topic. And another area that actually attracted quite diverse feedback was, so what about service performance reporting? Should it be in scope? And if so, how do we go about it? And I will talk about the tentative decisions that board made as a part of this project to date for the purposes of the discussion paper later. But it was one of the topics that attracted quite a diverse views. And again, not necessarily on whether it's an important topic. I think that's everyone acknowledged that it is, but how and when this should be addressed, that was subject to discussion. And the last part on a rightmost side of the screen is really consideration: how, as a staff and the board, do we go about it? Do we start from the blank page, blank sheet of paper, or do we leverage existing frameworks in the overseas jurisdictions? And if you will see at the, again, staff papers, in addition to the research, evidence, and feedback from the stakeholders and advisory panels, staff also considers how are individual topics or areas addressed in those referenced jurisdictions and their frameworks. They might be looking at the similar transactions and similar type of the entities. And we have listed them, or the main ones are listed on the screen. With that, I will move on to the next slide, which is illustrating possible interaction between the regulatory requirements, which is an important consideration when we are talking about tiers, especially multiple tiers, and current and potential future requirements under Australian accounting standards. And this example is using the ACNC requirements and the proposed thresholds that were just subject to public consultation, and this is depicting potential stage where, or in the future, where the SPF feasibility is not necessarily available, and instead there is additional tier 3 available to not-for-profit entities that is simpler to prepare compared to tier 1, tier 2, while still meeting the needs of the users of those financial statements. And it also shows that, and again, that was one of the tentative decisions of the board that we will talk about shortly, is that in lieu of no requirements to prepare financial statements in accordance with Australian accounting standards, the board at the moment is focusing on the preparation to develop a tier that addresses current requirements to prepare those financial statements. So the entities or the common transactions that board has in mind when it's developing proposals for tier 3 are actually the common transactions that would occur for the not-for-profit, by the not-for-profit entities of the size between 500,000 and 3 million of revenue. So while we are talking about smaller entities, we are not talking about small entities or those micro, which, for example, under ACNC requirements don't have a requirement to prepare financial statements in accordance with Australian accounting standards. And number of state and territory regulators, for example, in respect of incorporated associations, don't have that requirement either. But clearly, the interaction between the regulatory thresholds and the requirements and Australian accounting standards is important consideration from the process and project management. And that's why we also submitted submission, WSB submitted submission or comment letter into the Treasury consultation on the thresholds to the Treasury working group earlier this year, highlighting the importance of this relationship between the two sets of requirements, if you want. Moving on to the process, how we go about as a WSB and the WSB staff and the board agreed to a set of the principles that we are to provide consistency to WSB staff when considering the options for individual topics or areas under consideration. And these requirements really are trying to balance the needs of the users, the fact that we are talking about principle-based accounting standards and framework, but also trying to develop a proportionate and simpler framework and requirements. So the principles are summarized on the screen, being that these reporting requirements are subject to the not-for-profit standard setting frameworks or developed within the realms of that framework, and the resulting financial statements would be general purpose financial statements and therefore will be useful to the users. Consistency with tier 2 accounting principles is desirable, but not necessarily warranted. I think that's where the cost versus benefit consideration comes in, which is also the last principle on the slide, as well as where possible to leverage information that management already possesses and uses, however, without impairing comparability of the resulting financial statements, and making sure that the resulting requirements and financial statements are made within the context of the conceptual framework, and again are meeting the needs of the users. On this slide, we provide an overview of the process. How do we deploy those principles, and how do we come up as a staff with the proposals to the board, which is the after consideration of overall project objective, which is the financial reporting framework with those characteristics already mentioned. We then distill that into the tier 3 requirements objective, which is the simplified requirements that meet needs of the users of those small NFP entities. And that then results in the identification of the relevant topics. The inputs into that identification was where is the research available, is the feedback from the stakeholders that we received from the initial targeted outreach and ongoing, and from other projects as well, and other pieces of research that becomes available as we go. And also we are looking at how other jurisdictions, those I mentioned in the previous slide, have addressed particular topics in their requirements. And then we are considering options for simplification in the areas of recognition, measurement, disclosure, but also explanation and understandability, because I think we do recognize that when we are talking about tier 3, we are after simplicity of language as well as possible simplicity or simpler requirements in the boundary of user needs. And then those options are evaluated against those principles that I talked about on previous slides. And then staff provides a recommendation to the board, and board considers staff recommendation, also the arguments supporting or those recommendation or otherwise, before making again tentative decisions for the purposes of discussion paper. Moving on, talking about those tentative decisions to date. So the board decided to develop further reporting tier or proposals to consult in a discussion paper on those further reporting tiers, and decided what is the primary objective for the tier 3. It also decided to consult in the discussion paper on the proposal to remove ability to prepare SPFS for the not-for-profit entities when they are required to prepare financial statements in accordance with Australian accounting standards. WSB also does not intend to specify application thresholds for the tiers, and based on the feedback received from stakeholders to date, decided to address service performance reporting in a separate project. And I think this is also the opportunity for me to mention our upcoming agenda consultation, domestic WSB agenda consultation, which has been released as an invitation to comment, I think 46 recently, with a 6 months comment period, where we are seeking feedback from the constituents on what should form part of the WSB work program for the years 2022 to 2026, recognizing the number of the projects that are already in flight will take capacity of the board and the staff during the period, and this is one of the projects. But in that agenda consultation, WSB is asking whether the service performance reporting should be, I should say, probably restarted or addressed as a separate project. Obviously, following the feedback the board received on the ED 270, and the feedback received as a part of the initial considerations for this project, recognizing the importance of the topic for the sector. Then specifically for tier 3 accounting requirements, again for the purposes of consultation or discussion paper, board made the tentative decisions that the tier 3 would be a single standalone pronouncement, and decided to consult on providing choice between the consolidated financial statements or separate with the disclosure of significant relationships, permitting change in accounting policies voluntarily and limited retrospective approach, and allowing entities of tier 3 size or those applying tier 3 to step up and apply tier 1 or tier 2 requirements in its entirety if they elect to if they elect to so, and also for the omitted topics, recognizing the fact that tier 3 will be focusing on the common transactions that are common for the size of the tier 3 entities that board has in mind, and therefore will not necessarily cover all topics that are covered by the full suite of Australian accounting standards in tier 1 or tier 2. This is just briefly on what's next, what are the topics coming to the future board meetings. So board in November, so in 2 weeks time, will discuss staff recommendations and decide on its preliminary views on the primary financial statements. And in particular, are there any primary financial statements that necessarily need to be presented as a part of the tier 3 financial statements, and its position for lease accounting for the purposes of discussion paper on tier 3 requirements. There's a few other topics that are on the list. Now, some of the key topics have been identified by the outreach and feedback from the stakeholders to date, which is employee benefits, impairment, disclosures, and I think property plan investment and property plan investment property, and did I mention revenue? So I think these are the topics that the staff plan to address in relative detail, and we'll discuss the board whether board wants to express its preferred view for the purpose of discussion paper. There will be topics that we plan to address as a part of the draft of the discussion paper, possibly leveraging the treatment of in New Zealand Tier 3 accounting standards. Also recognizing the scope of the discussion paper is not necessarily the same as the scope of the exposure draft, and also for the sake of the speech to the market of the discussion paper to consult with the stakeholders. I see some messages in chat, but I don't think I have too many slides to go. In fact, one or two. So I may just finish the presentation, and we can then discuss whatever questions participants may have, if that's okay. So yeah. So on what's next? As I mentioned, board continues to deliberate on the proposals, and will continue to do so for the majority of 2022, aiming to issue discussion paper in Q3. Staff is always keen and to consider any new evidence and research available, as well as any stakeholder feedback, and that's why we always respond positively to any opportunities to engage with the stakeholders, like, for example, this session. We continue to review legislation in order to identify what are possibly different requirements existing in regulations framework in Australia, and how the requirements to prepare financial statements are defined in a variety of those requirements. Because we do believe that the interaction between accounting standards and the regulatory requirements is important to get right, to ensure that primary objective of the project, which is simpler and consistent and comparable and proportionate financial reporting framework. Important element or aspect of the project of this kind is, at least in my mind, structure and language of that discussion paper, and also the outreach strategy, acknowledging the, again, diversity and characteristics of the stakeholders and sector, and noting that if you would use overly technical language, the accessibility of the discussion paper would not necessarily be as we would like to have those effective conversation with the stakeholders. So this is definitely something on top of our mind. And yeah, after the feedback is received on the discussion paper, then board will consider the feedback before deciding on the next steps in half one 2023 and beyond. So I think that's it from me in terms of the presentation. Again, you have my contact details there. I'm always keen to hear any feedback from the constituents and stakeholders, so please do reach out. And now I may close the slides and open the discussion, if that's okay.
Absolutely, Freddie. That's fantastic. Thank you very much. We've got two questions in the chat room, and of course you can raise your hand as well, as Freddie indicated before. And I've also got a question, so I might use the chair's prerogative to kick off. Freddie, in relation to the tiers and the particularly small charities and not-for-profit organisations financial reporting, of course New Zealand has had a varied structure for some time now. I forget how many years, but it's certainly building up some experience there. Do we have an understanding or evidence from New Zealand that will help us to, or help the board to be able to make their determinations as well?
Absolutely. Thanks, David. So New Zealand is absolutely one of the jurisdictions that we are looking to leverage. And in fact, at some point early in the process, one of the thinking was actually to go directly to New Zealand Tier 3 and for the matter of Tier 4 and start there. However, given the different settings in Australia compared to New Zealand, and one of them Australia being federation, and I'm always jealous of our New Zealand brethren not having that complexity. it was decided that while New Zealand is one of the jurisdictions to consider, we will go a bit broader than that and considering IFRS for SMEs and also as also a UK SORP and FRS 102, etc., etc.
Yeah.
Having said that, we would personally I would always start with New Zealand. What's very useful is the fact that New Zealand just did their post-implementation review on their Tier 3 and Tier 4 standards, and we are very closely watching the feedback coming out of that process, and whether it's the treatment of their OCI, whether it's the language used in a standard, whether it's actually the revenue recognition requirements in those Tier 3. Absolutely, we are considering that and outlining to the board to include in their process. One thing what I would call out though is that their legislative requirements for the Tier 4 is slightly different, and they do have a Tier 4 because there is a legislative requirement for those small charities at this stage to prepare financial statements in accordance with accounting standards. Whereas in Australia, largely that requirement doesn't exist, and therefore board at this stage made a decision to focus its effort and staff's effort onto Tier 3, as opposed to come up with maybe nice to have requirements for those small entities, which would be probably nice to have, but if they don't have requirements for to prepare financial statements in accordance with accounting standards, yeah. That's maybe maybe next step if such a need will still persist.
Yeah, that's fantastic. We've got some questions, as I said before, in chat room. Kit has asked a question in relation to the not-for-profit financial reporting framework, and I guess more broader public policy issues around the unsustainability of the economic system. Kit, I'm going to be Tony Jones and take that as a comment rather than a query for this particular purposes, but move on then to David Hardage, who's asked the logical question: will we get matching for income recognition for grants, or is it too early to tell? And how different is it likely to be from IFRS for SMEs, adjusted for not-for-profits, or again, is it too early to tell?
Thanks, David, for the question. In terms of the matching for the income, it is too early to tell, but clearly we do recognize ongoing discussion about generally revenue recognition in Australia, and we are looking at the revenue as a topic since the project started, but we'll bring it to the board probably at the later stages of this project. And that's, I think, one of the reasons to go down the route of discussion paper as opposed to exposure draft, to seek that robust feedback from public, especially on the area of revenue recognition. So it's I think the short answer is too early to tell, but absolutely conscious of the feedback from the constituents, as well as the timing will actually work nicely, because we are hoping to have a post-implementation review feedback going along with this discussion paper on the Tier 3. So, because obviously Tier 3 is not in isolation, especially in the sensitive area as a revenue recognition, and that's why we will be considering the both projects along the same time. In terms of the IFRS for SMEs, again, IFRS for SMEs is one of the sources of potential accounting treatment and options we are looking at. I don't think we will land where IFRS for SMEs is. And obviously, if you look at the tentative decisions the board made, we are also not necessarily landing exactly where New Zealand Tier 3 is. So I think the decision to go broader than New Zealand or not necessarily look exactly where IFRS for SME is landing, I think was the wise one, because, for example, when we look at the consolidation, we actually, or the board made a decision not necessarily to require consolidation in all cases, reflecting on the feedback that sometimes it's actually useful to see standalone entity plus financial summary of the entities that are representing significant relationships. So I think we might end up with the hybrid, but again, it's too early to tell, because it is actually discussion papers. So the final product may well be quite different to what will be in a discussion paper, as opposed to if you would go down the route exposure draft. So hopefully that answers the question.
Thanks, Freddie. Comprehensively, I would say. Alistair posits a question as well. AASB research, I understand, shows there is currently low compliance with existing financial reporting requirements for NFPs, and my experience would tend to agree that there are many NFP financial reports that are subpar. If these new requirements bring in a higher level of requirements, how might that be implemented to encourage increased compliance?
Thanks for the question, Alistair. I wouldn't necessarily think that we are bringing explicitly higher level of requirement. If I'm thinking about it, obviously, Tier 1 and Tier 2 requirements are already there, and board didn't make any tentative decision to change that status quo. Tier 3 is obviously meant to be we are looking to ensure that it's simpler and it's transparent. For some entities that have subpar, if I will call it like that, special purpose financial reports, it may well represent a higher level of requirements. But then for some entities, the Tier 3 may represent simpler requirements, because there will be a number of entities of possibly Tier 3 size that are preparing quite sophisticated Tier 2 financial statements, and they may well benefit from the simpler requirements. But for those, obviously, where this will represent a bit of step up in terms of the robustness of the financial reporting processes and the outcomes, obviously, that's where the education role of WSB comes into play, and the profession as such, as well as there will be a lead time for entities to be able to prepare for those. And in line with the due process framework, the standards do not become usually or normally mandatory effective less than 2 years after they have been made. So there should be sufficient time for the entities to prepare, and obviously transition reliefs is something that we will address at some point as a part of this project. So to answer that question in short, there should be enough time and support for those entities that need to, I would use the word, step up to be able to do so in a way that it will be not detrimental to their operations.
Fantastic. Thank you, Freddie. I'm going to combine a question put by Kit and by Ikenna Azagoa. Essentially, Kit asks or indicates that he's curious if the updated AASB NFP financial reporting framework is, I think, likely to be mapped or linked to other important frameworks that address wellbeing, unmet needs, etc. And Ikenna has asked whether or not there'll be any provision for reporting on sustainability, which in the NFP context, of course, is much wider. So I'll combine those two. Freddie?
Yeah, thanks for the question. So obviously, at the moment, that not-for-profit financial reporting framework or standard setting framework will talk to the financial reporting predominantly. Obviously, sustainability reporting is the topic that attracts lots of attention, discussion, and obviously at international level. And then I think it's for the consideration, and it's being considered how, whether, and when it's going to be applied in Australia. And I think the natural step of that process is whether it should be applied to for-profits first and the not-for-profits. And I think in not-for-profit sector, I do see it going hand in hand with service performance reporting, even though personally, I do see some overlap between service performance reporting and sustainability reporting, but I wouldn't see it's exactly like for like. There are some aspects that are maybe wider on the sustainability side. So at the moment, the standard setting frameworks will not necessarily focus on sustainability standards, because they are they are not made yet and not part of the Australian reporting framework, but that's something that we would address in the future. Having said that, WSB did issue a bulletin that those sustainability issues or matters, to the extent they are impacting reported numbers, then those charged with the governance, whether it's management committees or directors, should be already taking them into account when preparing and signing off the financial reports, and disclosing, for example, significant judgments, taking into account, for example, climate change. So I wouldn't say that it's completely outside the financial reporting framework at the moment. It is, to the extent it impacts financial reporting.
Fantastic, Freddie, thank you. The penultimate question, or rather a comment put by Alistair that you might care to respond to. I commonly hear from many NFPs that applying recognition and measurement requirements is an administrative burden with no real benefit, especially application of WSB 16, which wouldn't be news to you, I'm sure. Any comments on that, Freddie?
Again, thanks for the question. And yes, so let's talk about WSB 16 maybe first. And that's actually a topic that comes to the November board meeting. So you will see that the staff recommendation is actually to simplify requirements for the tier 3. Having said that, when we're talking to the stakeholders, at least some of the stakeholders do actually appreciate the value add by the WSB 16, and that in many cases it actually delivered sometimes even surprising insights and how leases are managed or not. So there is actually value, I think, from that standard. It may be too complex for some of the not-for-profit entities, for example, of certain size, and I think that's why we staff have analyzed that in its submission. Generally, recognition measurement requirements as an administrative burden. We do, obviously, the framework, and it goes to the principles of tier 3 and this project, is to develop general purpose financial statements that are meeting the needs of the users. And we do want to work within the context of our conceptual framework and principle-based standards. So the project is trying to simplify or aims to find a way how to simplify some of the requirements while it's not detrimental to the needs of the users. But it is balancing act, and also and that's completely personal view. I do see financial reporting as important governance tool of the running of the business, and it may be achieved in slightly different ways. And for example, for leases, instead of recognition measurement, it may be addressed through the disclosure requirements, possibly. And going back to the revenue, yes, there is a number of ways how one can look at recognition measurement for the revenue. And we have heard from the research that accounting standards generally are not necessarily becoming less complex. But I think it's also the reflection of the world around us. It doesn't necessarily become less complex either. So it will be a balancing act where for tier 3, we absolutely want to look at whether we can develop simpler requirements. For tier 1 and tier 2, again, those are subject to the decision that board made in the past, and they were subject to the not-for-profit standard setting framework. And where the decisions, where there were justified circumstances to make departure from IFRS, then the board made those decisions. But for example, you may see in November board papers that we are asking to boards to consider whether to make the option to recognize initially concessional leases at cost, whether to make that option permanent. That's another way how WSB and its staff are reflecting on the feedback received from the NFPs to make those justified concessions to reflect specific not-for-profit entity circumstances.
Thank you, Freddie. The last question from Michael Buckmaster. Has there been much thought given to NFP groups, including subsidiaries, currently preparing special purpose financial reports?
Thanks, Michael. So I think it goes back to the consolidation requirement. Having said that, we do. So the board will consult or has made preliminary decision to consult as a part of the discussion paper whether to propose removal of the ability to prepare special purpose financial statements when required to prepare financial statements in accordance with accounting standards. So that doesn't necessarily mean that the entities will be not preparing special purpose financial statements for other purposes. For example, for the funders, for specific requirements of the donors, for the equitable purposes or grantors. But the aim is to bring the consistency and comparability into the financial reports that are being prepared in accordance with accounting standards. And upon recognition that for some currently preparing special purpose financial statements, tier 2 would be too complex and unnecessarily complex. That's essentially the reason why, or one of the reasons why we are working on how we can further simplify tier 2, calling it tier 3, that can be a proportionate response for those entities of the size that board has in mind, which is 500 to 3 million when looking at their common transaction and common needs.
Freddie, thank you very much. Alistair Abbott's also made a comment. Thank you for an excellent presentation. I'm sure we all concur in that respect. Not only timely and interesting in terms of obviously its impact on financial reporting for not-for-profits going forward, but also your very frank and substantial answers to questions I think are very much appreciated as well. So Freddie, thank you very much again, and I'm sure on behalf of everyone we really appreciate your time. Everybody, thank you for coming again. We've got one more session, as I mentioned before, for 2021. Believe it or not, it's amazing how quick time flies, and that'll be on the 26th of November. Angus Thompson from the WSB will be presenting at that session. Looking forward to seeing you all around the traps in due course. Thank you again, and goodbye. Cheers.
Thank you.